So good morning once again. I am Malimi Akinda Prabhas.
Good morning, sir.
Good morning, sir.
Thank you. So I'm here again for ISA 313, that's intermediate accounting. So we are going to start with study session 2 today. So permit me to share my screen. So can you see my screen?
Yes, sir.
Yes, sir.
Yes, sir.
We can see.
Okay, thank you. So this is study session 2. Study session 2 talks about company account reports. So if you have access to your learning management system or these study materials, so you can also open it and we move along. So from this study session, let me try to introduce you to the course. So this course talks about financial accounting. Do you understand? So the financial accounting that we are talking about is a specialized branch of accounting that keeps track of the company financial transactions. So under standardized guidelines, the transactions are recorded, summarized, and presented in financial report or statements, which include an income statement or the balance sheets. So what we are trying to put across to you here is that this particular course is all about financial accounting. And this particular study session is talking about the financial reports. So how are we going to structure our financial reports? What are the things that we must find in our financial reports? So then again, if we are talking about the contents, what are the major contents of the financial report that we are talking about? So as far as this study session is concerned, we'll be talking about the income statement, which we can term as statement of profit or loss and other comprehensive income, or a balance sheet, which we can refer to as a statement of financial position. Because due to recent development in accounting, the balance sheet has been changed to statement of financial position. It's no longer a balance sheet again. Then the income statement can be profit or loss and other comprehensive income. So now, the aim of this financial accounting that we are talking about is to provide enough information for others to access the value of a company for themselves. So now, at the end of this study, you should be able to itemize the users of financial statement. Who are those people? Who are those users? Who are those people that have interest in the financial statement? And what are the content of the financial statement? You know, I mentioned two of the content before. I made mention of income statement and the balance sheet or statement of financial position. Then at the end of this study session, you should be able to explain the provision of CAMA related to company financial reporting. So what is the position of CAMA, that is Company and Allied Matter Act 2004. So is there any provision of CAMA that related to financial reporting? Then itemize the issues required for account notes. Then we should be able to discuss the steps involved in cash flow statement. If you look at all these learning outcomes, you understand? So those are the things that we need to cover as far as this study unit is concerned. So let's get started. The first thing here, which is the first learning outcome, is users of accounting information. Users of accounting information. Who are the users of accounting? We have various users of accounting information and the kind of information that they need. So that's the reason why we must study the users of accounting information and what are the information that they need. So the first users of accounting information as regards financial report is the individuals, financial institutions, or group of people or group of users. What are the information that they need? They require accounting information so as to determine the liquidity, profitability, and viability of the enterprise. So liquidity in the sense that is the business or the organization able to meet their day-to-day obligations. Do you understand? So the users need to know whether this organization can meet their day-to-day operations. So that's the reason why they need information about the liquidity of a company. Then they need information about the profitability. That is when they will look into the statement of profit or loss and other comprehensive income, whether the company is making profit or not. So that's the reason why the account and the users of account information, that is individuals, financial institutions, or group of users, they need information about what? About profitability and the viability of the enterprise. So that is that about the individual financial institutions or group of investors. Then we have customers and employees of an enterprise. So the customers and employee of an enterprise need account information in order to assess the ability of the enterprise to produce goods or render services on a continuous basis. What we are saying here is that for customers or for employees to assess the ability of an enterprise to produce goods or render services on a continuous basis, that particular information are really needed by the customers and the employee of an enterprise. You understand? So another thing is managers. Managers also have interest in financial information because they need these information to measure the performance, plan, and control operations. So that is why if you look at all the organizational structure of every company, we have the strategic management, we have the tactical management, and we have the operational management. All these three levels of management, they need an accounting information to measure the financial to measure the performance of a particular company. Once they have measured the performance of that particular company, they will be able to plan and control the entire operations of the organization. Then another interesting users of financial statement is government and regulatory bodies. Government needs accounting information for them to regulate certain business and plan, execute certain businesses, and evaluate government project or plans. So if government, there are some products that they need to plan by government. Do you understand? If they don't have information about a particular company, it will be very difficult for the government to ban that particular company or to plan, execute, and evaluate their own personal projects. Then we have regulatory body like Central Bank of Nigeria, Security and Exchange Commissions, Nigerian Stock Exchange. Although the Nigerian Stock Exchange has been changed to Nigerian Exchange Group, it is no longer Nigerian Stock Exchange. It is what? Nigerian Exchange Group. Then we have Federal Inland Revenue Service. Federal Inland Revenue Service, they are the servant of our government. They need account information to know the appropriate tax to be deducted from each particular company. So all this information is very, very important to what? To Federal Inland Revenue Service. Once they know the profit after tax of a particular organization, they'll be able to know how much tax has been deducted. So then we have quasi governments established. So the quasi government, those are the other parastatals that are not governmental in nature. So they also need accounting information in order to meet their statutory obligations. So we have competitors as well. Competitors also need accounting information to assist in formulating policies to effect competition. So then creditors also need accounting information to access company liquidity and ability to meet their obligations as well. I've explained this in the first users of financial statement. Then financial analysts also need accounting information in order to facilitate comparison of the company financial statement from year to year. So if you want to compare the financial statement of a particular company, do you understand? Let's say you want to make comparison based on 5 years financial summary. So you need those information for you to be able to compare what is the profit in year 2005, what is the profit in year 2006, what is the profit in year 2007, 2008, and 2009. So once you're able to know the profit, you'll be able to know the trend where the profit goes. You understand? Once you know their asset, you'll be able to know in year 2005, asset has been utilized effectively. In year 2007, it's not being utilized. So those are the things that you need to know as far as accounting information is concerned. So financial analysts also need accounting information to make comparison. So Let's quickly move to the provision of Company and Land Matter Act 2004. So what is the position of Company and Land Matter Act as regards financial report of every company? So the section 331 of Company and Land Matter Act, Cap C20 LFM 2004 states that every company should keep accounting records. Every company should keep accounting records. Although in line with IS1, interpretation of financial statements, IS1 states there are some minimal requirements that must be provided by each company. So the minimal requirement that we are talking about is that every company must have profit or loss and other comprehensive income. Every company must have statement of financial position. Every company must have statement of cash flow, that's cash flow statement. Then every company must have statement of changes in equity, then note to the explanatory note to the account. So those are the minimum content as regards IS1. But the Company and Land Matter Act also states that every company should keep account of should keep accounting records. So the accounting records should be sufficient to show and explain transaction of the company and should include at any time financial position. Directors enable directors to ensure that the financial statement prepare comply with the requirement of the account. Then the accounting records should contain entry from day to day of all sum of money received and expended, the company and the matters in respect of which the receipt and expenditure take place. What they are saying here is that every account that has been prepared by the company must contain the expenses and the income. When it comes to all these government accounts, so you must ensure that the receipt account and the expenditure account must be there. Then every company must have a record of asset and liability. This asset and liability of the company, what they are saying here is that, who is this person now? So what they are saying now is that you must have, as a company, you must have a statement of financial position. You know, from the statement of financial position, you'll be able to determine the assets, and you'll be able to determine the liability, and you'll be able to determine your equity. So that's what the Company and Land Matter Act C20 element 2001 states. What they are saying here is not different from what the IAS is talking about. That's why international accounting standard, they are part of the regulatory document that very important document that every company must comply with. So now, let us then, if the business of the company involves dealing with goods, the accounting records shall contain a statement of stock held by the company. So this statement of stock held by the company is part of the inventory, in which IS2 has even explained how to include our inventory in a statement of financial position. So then the statement of stock held by the company at the end of the accounting year of the company. So IS2 has covered everything as regards these statements. So then we have the statement of accounting policies. So statement of accounting policies is a very important element that must be found in the financial reports. So accounting policies are those basis, rules, principles, conventions, procedure that every organization must adopt in preparing and presenting their financial statements. Do you understand? So sometimes judgment is required in the choice of the accounting policy, which are appropriate to the circumstances of an enterprise and will be best suited to present the true and fair view of its results and financial position. What they are trying to say here is that I said something the other time. I said there are some things that are explained in the standard. Do you understand? That are not in the framework. Then there are some things in the framework that are not in the standard. That's why framework, conceptual framework, is not a standard. But it helps in the preparation of what? Of the standard. So, but it is not what? A standard. In case of a conflict between the standard and the conceptual framework, it is this IFRS that will prevail. Where I'm saying standard, I'm talking about IFRS because IS will soon go into an extinction, whereby we are no longer using IAS again. But the IFRS is in operation now. So where I'm saying standard, I'm talking about IFRS and partially IAS. Do you understand? Sorry. So now, if there's a conflict or conflicts of a particular item between the IFRS and the conceptual framework, it is the IFRS that will prevail. Do you understand? But there are some things that are not even explained in the standard, are not even explained in the conceptual framework. So now judgment is required. That's why I said in the class, I forgot, maybe this class, artificial intelligence have taken most of the accountant work, in the sense that if you need a report in 5 minutes, a report of a particular company, just need to slot in some information and it will provide you the report, either statement of financial position or statement of profit or loss and other comprehensive income, within 5 minutes, in which the accountant will not be able to do within that 5 minutes. Do you understand? But for the fact that the AI has taken most of the job, do you understand? AI cannot make judgments for the company. So judgment is required in some cases whereby the standard does not provide a particular reference for that particular item, or the conceptual framework does not provide a particular reference for that particular. So it's the judgment that will prevail. Exactly. So we have accounting convention and we have fixed asset. All these things, they are part of our financial report. So they are the things that we still need to talk about. For instance, when you are talking about investment, this investment of the thing is discussed under IS 41, IS 40, investment property. So when we get there, you understand better. The turnover, that's the main caption of our sales revenue. Anytime we want to prepare our profit or loss account. So the first item there is turnover, which is sales revenue. Then we have deferred taxation. Deferred taxation is discussed under IS 12, income tax. Do you understand? So we still go to details later. Then we have employers' retirement benefits. The employers' retirement benefits is discussed under IS 19. Do you understand? Employees' benefit. Then we have research and development under IS 37. So those are the things that we need to understand as far as this is this financial report is concerned. Yeah, we have what is referred to as consolidation. When you mean consolidation is just a group. Whereby you have a parent and you have what subsidiary. So whereby a parent will control the subsidiary. Do you understand? So that's what we mean by a group. So, and in a consolidation, we have what is referred to as group financial statement. So which will now comprise of all the content, but the only difference is that you'll be adding consolidated. For instance, when you are preparing financial position for a group, it will be consolidated financial position. When you are preparing income, profit or loss account, and other comprehensive income for a group, it will now be consolidated profit or loss and other comprehensive income. So that's just the difference between single account and a consolidated account. So then we have balance sheet. Balance sheet is statement of financial position is hitherto called balance sheet, but nowadays we no longer call it balance sheet, we call it statement of financial position. So, and in the statement of financial position, we have 3 things, and I've told you times without number in all my classes. When you are talking about balance sheet or statement of financial position, 3 things are very, very important. The first one is the assets. The second one is the word liability, and the third one is what equity. Do you understand? So if you see a balance sheet, let me see if I can get one another report here. So if you see a balance sheet, well, the most important thing there is you look at the assets, and the assets will be grouped into 2. We'll be talking about the fixed the non-current assets and the current assets. So non-current assets spans for more than a year. We can say 3, 4, 5 years, but the current assets spans within a year. So there's no report here. So in the statement of financial position, you see the asset side. The first thing is your non-current assets, and the non-current assets can only be explained under IS 16. That is property, plant, and equipment. Exactly. The current assets, under the current assets, we have bank at hand, cash at hand, cash at bank. Do you understand? So we have inventory, Do you understand? So those are the current assets that we have. So asset that spans within a year. So then we have equity. Do you understand? Equity is just the residual interest. Let me just first of all explain liabilities. So liabilities are just a present obligation after a present obligation in which a company is controlled that particular liability as a result of past events, and in which economic benefit will flow out of the entity. So it is not the benefit of the entity, but the benefit of the person that owns the liability. So what we are saying about liability is that when you acquire an asset, and the asset that you acquired is through a loan, long-term loan, do you understand? So the benefit of those assets, instead of the benefits to be flow to the entity, it will flow out of the what? Out of the entity, because you have to pay back the principal and the interest. Unlike the assets in which the benefit will flow to the what? To the entity. So assets are the resources that are controlled by the entity as a result of past events, in which future economic benefit will now flow to the entity. But the liability, on the other hand, they are the present obligation controlled by an entity in which future economic benefit will now flow out of the entity. So then the equity is just the residual interest after you might have deducting liability from your assets. Whatever that remains, asset minus liability will not give us what? Equity. So all these elements, they can be found in the statement of financial position. So we have the non-current assets. We discussed that under IS16 as property, plant, and equipment. All these property, plant, and equipment, land, freehold, the building, everything, they are under IS what? IS16. So that is that about. So we have current as stock and work in progress. They are current asset, prepayment, current assets, sundry debtors. So director debit balance, intercompany debit balance, all those short-term investment, all these are current assets. So we have capital and reserves. This is under equity. Do you understand? So those are the things that you find in the statement of what? Financial position. Then when we are talking about profit or loss, another comprehensive income. So there are so many things there, but the major thing is income and expenses. The income and what? And the expenses. So you have your turnover or sales revenue. So you deduct all the cost of goods sold. Do you understand? So after which you take care of all the finance costs, all the expenses, so for you to arrive at what? Gross profit before tax. So then you deduct your tax. After deducting tax, you have profit after tax, or we call it profit for the year. So you have extraordinary items under the statement of profit or loss and other comprehensive income. So any per share, dividend per share, they can be there too. So then we have notes to the account. The financial statement should be accompanied by appropriate explanatory notes to the figure in the balance sheet, profit and loss account, and cash flow statement. The Company Alignment Cap C20 LFN 2004 specified the requirement of disclosure of the following information in the note to the account. So there are some information that are relevant for the users of the financial statement, but they are not monetary in value. So, and those information must be provided in the financial reports. So like director's emolument, stating chairman's emolument, highest paid director emolument, director's fees, other emolument, number of directors, and so many other information that even all gender diversity, if the ratio of females to male, do you understand? Those are the things that you need to put inside the financial statement. They call it notes, explanatory notes to the account. They are not monetary value, but they are an important information that are needed to be provided to the users. So steps involved in cash flow statements. So these are another important information that we need to understand. When we are talking about cash flow statements, let me just say something about the cash flow. Do you understand? Cash flow involves two things: the cash inflow and the cash outflow. Do you understand? So cash flow statement involves statement of cash inflow and cash outflow. That is why the cash flow statement is discussed extensively under IAS 7. IAS 7 is a statement of what? Cash flow. So IAS 7 requires information or requires statement of cash flow to report cash inflow and can call it OIF, operating, investing, and financing. So if you look at the cash,
yes, sir.
oh, sorry. Hello, please, can you hear me now?
Yes, sir.
Yes, sir.
Okay.
We
Yes,
can
what
hear
I'm
you,
trying to
sir.
say is that, yes, what I'm trying to say is that cash flow statement involves inflow of cash and cash equivalents. Do you understand? Cash inflow and cash outflow. Exactly. So, and this cash flow statement is discussed under IS 7, statement of cash flow. And there is no IFRS for cash flow statement. So now we still use IS 7. IS 7 requires statement of cash flow to report cash flow during period classified under 3 headings. One, I said I normally call it OIF, operating activities, investing activities, and financing activities. Do you understand? Operating activities, investing activities, and financing activities. So when you see a cash flow statement, you see all those 3 headings, and you see the information under each heading. So now, when you are talking about operating cash flow, do you understand? Operating cash flow shows whether and to which extent company can generate cash from their operations. Do you understand? The extent by which company can generate cash from what? From their operations. That is why under the cash flow, under the operating cash flow, you see profit before tax, depreciation and amortization, profit or loss on disposal of fixed assets, provision for unfunded pension plan. You can also see cash receipts from the sales of goods. You can see cash receipts from the royalty, penalty, fees, and some other things. You can see cash payments to the suppliers, cash payment to the employees. Do you understand? So those are the things that you find under the cash flow from operating activities. Do you understand? So then we have cash flow from investing activities. Do you understand? So cash flow from investing activities. When you look at the word investing, that one has to do with acquisition of property. Acquisition of property, plant, and equipment. When you acquire property, plant, and equipment, when you utilize it, so everything, whether you pay a cash to acquire the property, whether you pay a cash to acquire shares, do you understand? Whether you receive a sales you receive a cash from the sales of shares, or you receive a cash from the sales of properties, those are the things that you find under statement of what cash flow from investing activities. Then we have cash flow from what do you call it? The third one, financing activities. You understand? That one can be like if you pay dividend. You understand? When you invest, you have to get dividend in returns. Do you understand? So that's the information that you need about the cash flow from investing activities. So those are the things that you need to know as far as the cash flow statement is concerned. So value-added statement, although this has been removed from the financial reports, do you understand? It has been removed from financial reports. It has been embedded in some of the content. So what we mean by value-added statement is that the value-added statement gives account of the additional wealth created by an enterprise. So if there's an additional wealth created by a particular organization, do you understand, on its own or by its employee effort during the period acquired by financial statement. So that's what we mean by what value-added statement. It is not part of the organizational input, but it has been generated personally by the enterprise on their own or by the employees' efforts. So it usually shows how the wealth created has been distributed. Oh, we have created wealth. How does that wealth distributed to among various stakeholders or interested groups, such as employees, government, creditors, provider of capitals, and that retained for the future creation of more wealth? Or what are the percentage retained in the book of account? So that's what we mean by what value added statement. It's also because the cost of input, the difference between the cost of input and the value of output. So what are the things that we put into bin for us to generate this particular output? So then we have used, let's say for instance, we have used 10 million naira as an input. Do you understand? And we generated 20 million naira. So the difference between 10 and 20 million, which is 10 million naira, is the value that has been what? That has been added. So that is that about the value added. Thank you and God bless you. So that's that about it's in the 313. If there's any questions, contributions, comments, reactions, please do so before we call it a day. Questions, reactions, comments. Please ask your questions now before I ask my own. You wanted to say something? Hello.
Good morning, sir. Well, sir. Fine, sir. Please, I want you to recap on that cash inflow.
I can't hear you.
I want you to recap on that cash inflow, sir. That cash inflow. I want you to recap on it, sir.
That what?
Cash inflow.
Can you chat me up? I can't hear you. Your network is bad.
Okay, sir.
Hello. Chat me up, please. So, Esther, okay. Check your charts. I've sent the material. Esther, okay. So how can someone write an attendance, please? Don't worry about the attendance. I've gotten my own attendance here. There's no problem about that. System has captured that. Hello, Amo. I'm expecting your question in the chat.
Hello, sir. I'll send you, sir.
I'm expecting your question in the chat.
I've messaged you, sir.
Okay. Somebody said, can you help me recap on cash inflow? Hello. Please, let me just say this before other question. I said something about the cash flow statement. I said cash flow statement involves cash inflow and cash outflow. Let me give you an instance. If you have intention of having a particular business, do you understand? You have to inject money into the business for you to get back or put back your investment cost. What we are saying is that the money that you have injected is in form of inflow. Do you understand? Exactly. So that's cash inflow. It's as if you invest in which you'll be expecting what? Return. So cash that you have injected into a business is first as well cash inflow. So in cash flow statement, we have cash inflow and we have cash outflow. That is why those things are classified under three headings. Cash flow from operating activity. I said under cash flow from operating activity, cash received to suppliers. That's cash inflow. Then we have cash paid to suppliers. That's cash outflow under a particular heading. I don't know whether you understand what I'm saying. Cash received from supplier, when you receive a cash from supplier, that's inflow. When you pay cash to supplier, that's what outflow. So that's what we mean by cash inflow and cash outflow. So more explanation on OIF activities. That's what I said. I said when you are talking about cash flow statements, we have three headings. If you see a format of cash flow statement, we have three headings there. The first heading is operating activities. That's O. The O in OIF stands for operating activities. So that is, you want to know the cash generated by what? By the business. So operating activities, the I is investing activities. So when the business acquired an asset or acquired shares, do you understand? So that's investing activities. That financing activities. So when business finance a particular business or particular assets, do you understand? So that's financing activities. So please, the position of your camera. What do you want to do with my camera? Like, okay, there's a lighting reflection. Yeah, that's why I intentionally blur the camera so you will not be able to see what is at the back. There's no problem. Thank you for that. So any other question? You said you are unable to see the material. If anybody saw the material, please signify, let us know. I've sent the materials now. In the chat, check your chat. You see it in form of a PDF. Let me resend the materials. Let me resend the materials, please. Please, if you have seen it, let me know. Have you seen it?
No.
Please signify. It's there now. Look at it. You have not seen it.
Yes,
check
sir.
your charts.
It's there now.
Check it. It's there. Okay, Abi, what's your name? Have you seen it?
View.
Hello. Have you seen it? So, in the absence of questions, reactions, comments, I think we can call it a day. Okay. Somebody talks about accounting conventions. So accounting conventions are just guidelines that are used to help companies or organizations to determine how to report certain business transactions that have not yet been fully addressed by accounting standards. So in terms of judgment that we are talking about, that's what we mean by accounting conventions. Somebody still say unable to download, sir. I don't even know what to do again. So I think there's no more other questions. So in the absence of questions, reactions, comment, I think we can call it a day. So bye. Take good care of yourself. Bye-bye.
Thank you, sir. Bye.